Hey, I'm Melanie the Realtor, and today we're going to talk about credit scores. Before we get to that, make sure that you hit subscribe so that you don't miss a single episode of all the information we're putting out about how to buy a house and what the housing market looks like in Houston, so that when it's the right time for you, you are ready to go. Like I said, today we are going to talk about what is a credit score. Pretty much we all have one, and it is a score of how good you are at handling debt. When you borrow money from somebody, do you pay it back? Do you pay it back on time? When someone gives you a credit limit, do you use the whole thing? All of those kinds of things are going to be wrapped up into your credit score, because someone wants to know when they're lending you money, whether it's for a home, for a car, for a credit card, when they're lending that to you, they want to know that you're going to pay it back. And that's what a credit score is. It's a score that says, hey, this person can handle their debt. This person, if you lend them money, is probably going to pay it back. The higher your score, the better you are at handling debt, and the more likely you are to get good loans at good rates. So let's talk about them. You can always check, you can once a year check your credit scores at annualcreditreport.com. By federal law, you can check all 3 credit bureaus for free once a year, so you can do it that way. There are also all kinds of free apps and paid apps to help you keep tabs on your credit score, but there are typically 3. There are 3 credit bureaus, and different things get reported different ways to those credit bureaus. So those scores are typically different, anywhere from a few points to dozens of points different. But when you look at those credit scores, the mortgage lender is gonna use the middle one. Okay, so 3 scores, you want to check all of them. The credit lender is going to use that middle one. When you're looking to buy a house, you really want that to be 620, 650 or higher. FHA guidelines and things like that do often allow for lower credit scores, but then they're going to be looking a lot at why are your credit scores so low. There may be some additional things. Your interest rate may be higher. So right now, FHA loans can go typically as low as a 580, but you're going to need to have the rest of your finances really in order to be able to qualify under that. Otherwise, you're really going to want it to be higher than that. And really, the higher your credit score, like I said, the better loan you're going to get, the better terms you're going to get, the more you're going to be able to qualify for, and that's going to save you thousands of dollars in the long run. Because home buying is not a one-time thing. Home buying, unless you're buying cash, is a long-term promise to pay back debt. So over that long term, if you can save your family thousands of dollars, that's a pretty good thing. So you want those 3 scores to all be as high as possible, and your lenders are going to use that middle one. Okay. Another thing to note is when you look at all of those and then you go apply for a loan pre-approval, they may come back with a little bit, like if you look and they're all here, and then the mortgage guy comes back and your credit scores are here. That's not uncommon. The mortgage scores pull the most comprehensive information, so when you're applying for a credit card, that's a revolving credit score. When you're applying for auto loan, that's a little bit different credit score. When you apply for a mortgage, that's going to be the most strict. And so, like I said, when you check them and they're all here, and then you apply for pre-approval and the mortgage guy says all 3 of your scores are here and they're using the middle one, don't be surprised if it's a little bit lower than what you were expecting. So that just gives you more reason to raise your credit score as high as possible. So what do you do? Like, how do you raise a credit score? A really good way to do that, 2 of the biggest factors in your credit score are going to be payment history. Do you pay on time? A lot of times, if you have late payments and those get stuck on your credit score, they're going to stay there for 7 years, and there's not always a lot you can do about that besides to let them hang around until they fall off after 7 years. Or the other, so that's payment history. The other one that's a huge deal is credit utilization. So if someone gives you, let's say you have a credit card with a $10,000 limit. If you only have $3,000 on that card, your credit utilization is 30%. If you have $9,500 on that card, your credit utilization is 95%. You want to keep that amount as low as possible. So how do you do that? One of the ways to lower that amount is to pay off your cards, but don't close them. I remember when I was in college, I was working an office job and sitting next to this girl, and she paid off her credit cards and she closed them, and then she was so mad that her score went down. Because she paid them off and then closed them, that empty space wasn't counted in her credit card ratio anymore. If she had left them open, then what was left on her other cards, her credit utilization wouldn't have been as high. It's a little confusing, but just remember, pay them off, don't close them. Now, that doesn't mean go use them. If you completely pay off a card, cut that sucker up or freeze it in a block of ice so that if you are going to use it, you really have to work to get it back, right? But pay them off, don't close them. Another thing that you can do is you can actually go back and ask your credit card company for raised limits. If you have a credit card with a $5,000 limit and they will raise it to $7,000, $8,000, $10,000, that's gonna, instead of dropping how much you owe, you're raising how much credit space you have, and so that's going to drop your ratio usage. Now, don't go ask for a limit and then spend all of it. That's not helping your credit score. You want to ask for a raised limit, and they can say no, but you want to ask for a raised limit and then don't spend the extra space that they give you, and that's going to drop your credit utilization. If they say no, you can apply for a new credit card. That is going to, if you get approved for a new credit card, that's going to raise your space as well, but be careful. Only apply for one. If you apply for 12 new credit cards, then when someone goes to check your credit, it looks like you're a crazy person about to rack up $30,000 worth of debt, even though that's not what you're about to do. So pay off old cards, but don't close them. Ask for raised limits on the cards that you have. If they tell you no and you want to increase the credit space that you have, apply for one new card. And then the other thing that you can do is I just already told you that you could go check your credit reports. You want to make sure that everything on there is accurate. Go back. I one time checked my credit and there was some account linked to mine that wasn't a Discover card that I had. Somehow the wires got crossed and it got reported on mine. It was going to negatively affect my credit, so I disputed it. So you can contact the credit bureaus if you see something that's not right. You can dispute it. If you say that American Express is reporting that you had a late payment and you didn't have a late payment, you can dispute it, and the credit card company is going to have to respond to that. And if not, then it could possibly be removed from your credit and your credit could go up. You really can, if you have a situation like that where you had like one payment that was off or something like that, you can go directly to the company that owns your debt, MasterCard, Visa, whoever, and you can ask them for forgiveness. Basically ask them if they're willing to remove it. You've been a loyal customer for X amount of times, or for 5 years, and you just missed that one payment. The worst they can do is say no. So just ask. You also want to look at paying your debt off twice a month instead of once a month, because here's the deal. Let's say you have a $5,000 card and you pay it off every month, but that company reports your credit usage to the credit agency on August 15th and you pay it off on the 20th every month. Then it's not showing that you pay it off. It's just showing that you're using almost your whole card. So you want to make sure that if you pay it off twice a month, then you're much more likely to hit the right time. You're not going to have as big of a credit utilization overall. So pay it off, start going to a twice a month, like every time you get a paycheck, pay off that card instead of waiting till once a month. And then depending on your situation with your family, with your friends, if you're in a situation where you have good relationships with people and they're willing to do this, you go to your parent, your aunt, your uncle, your cousin, your sibling, whoever who has really good credit, and you explain to them, I'm trying to raise my credit score. Can you add me as an authorized user on one of your cards? Tell them that you won't use the card and then actually don't use it, because you're going to completely screw up your relationships if you do that. And that's why this is one of the last resorts. It's really touchy. So tread carefully. I probably wouldn't use this one myself, but other people can use it. And then you want to be added as an authorized user on their account. When the card comes for their account, cut it up multiple times, throw it in the garbage can, because you're not going to use it. But because you're an authorized user on that account, you're now going to get their positive payment history and their positive credit utilization score affecting your credit in a positive way. So let me give all of this with a caveat. I am not a financial advisor. I am not a credit repair specialist. I can refer you to some of those people if you want me to. But those are some things that you can do to help improve your credit over a couple of months so that you can put yourself in the best position possible to get approved for a loan, to get approved for a good loan, so that you can buy the house of your dreams. So don't forget, hit the subscribe button. If you have any questions, go ahead and tap the link that says have Melanie call me, set up an appointment, and I'm happy to help any way I can. And I hope everybody has a great day.